recall that one of the two highest sources of GST is transport, and that GST is actually a regressive tax, meaning that the poor will actually pay more as a percent of their income for GST. So if you want to address this problem, that the poor are actually having higher GST burden, what should we do? We have to look at how people spend their money. There are quite a lot of information here as well. The blue line, again, is the income. And the bars represent different categories of expenses as a percent of your income. So what I want you to focus on is the light blue bars. For the poor people, low-earning households, they spend about 2% of their income on transport. Compare this with the high-income group, 5.8% of the income on transport. And the middle-income group, 6.7%. So one way of trying to address the regressive nature of the GST tax is to look at transportation. Because if you look at the other colored bar, as the income increases, they actually shrink. So, for example, the red bar, food and non-alcoholic beverages, it shrinks quite drastically when income increases. So, transportation is a category that if you want to start focusing on trying to address the nature of the regressive tax, is something that can be focused on. So can we make GST to be more even, that the rich, the higher income groups actually pay more as a percent or even percent as the low income groups? There are several ways. One is a multi-tiered GST system, meaning that certain items has X percent and some other items have higher than X percent. So it's a multi-tier system with 0x and higher X. Of course, the other way is to levy high GST on selected items. Say, the items that will grow or increases as income increases. So for example, the transport. And of course, income tax adjustments and whether tax credits can be refundable, these type of things. So we need to balance up because, one, we need the money. So of course, levying zero tax is going to be not hitting anyone, but that's not realistic. We need to raise the same amount of tax. We need to broaden it so that it doesn't really hit a certain segment of the industry. And we need the money. And of course, we need it to be easily administered because the cost-benefit analysis will come in if you have a very complicated tax system. We find that it's actually very difficult. It's very difficult to tweak the GST system to make the middle income group pay less. So recall the graph that we had. It is going up and then it falls down quite rapidly. It is that middle income group which we are trying to make it less, and it is very, very difficult to achieve that. So let's put it into perspective. We have set 7% as the base case, and then we have tried with a multi-tiered system and a system where it is having high GST rate on very selected items and then 0% on everything else. So very focused group, very focused tax on selected items. So what do we have? Let's look at the top graph. Top line is the red line. The red line is our base case. So 7% across most items, exempting like the basic food, the healthcare, the education. And then we have got the blue line, which is that we have 25% GST tax on transport because, as we have seen earlier, transport, the percent of your income spent on transport increases when your income increases. So if we focus on transport, heavily, 25%, and then 2% on everything else. And the third scenario is that we have 17.5% on transport, and then everything else is 0. So you can see from here is that the line, the blue line and the yellow line, tends to be lower than our base case on the left-hand side of it. So we are making the low-income groups paying lesser GST as a percent of their income. And likewise, we are successful in making those higher income groups, those on the right-hand side, to have a higher tax burden. So the graph sort of tilts upwards. But in the middle, you find that they are all lumped together, more or less lumped together, and that the first point is that this group in the square box is higher than the than the high income groups. It's higher than the high income groups. So this regressive nature of the GST tax cannot still be addressed by tweaking the numbers, the type of expenses, as well as increasing the amount of GST rate, with the important condition that it has to raise 7 billion. So we find that GST is strongly regressive. It hits the poor disproportionately more. And it's very difficult to make the high income earners to pay more. Because GST is very intrinsically, that's the nature of it. It's hitting the poor more. So we find the middle income still ends up paying a lot more than the higher income. So because of this, you cannot start, just tweaking around with the GST system is not going to help. You need the income tax system to come in. You need the bands to change, you need the income tax to change so that the regressive nature of the tax can be addressed. Of course, that's one issue. We also need to consider the wider implications of introducing GST. The first thing is, of course, effect on inflation. If you use the consumer price index, which is the official way of measuring inflation, it's going to increase and for an additional 3.86% if we introduce GST at 7%. And one of the reasons why GST might be introduced, or likely to be introduced, is we need to address the concerns of credit rating agencies. Is it going to be sufficient? Is foreign capital going to be assured that the tax is going to be sufficient to plug the fiscal deficit? But of course, it needs to be a wider fiscal reform because of the regressive nature of GST. Everything else needs to be looked at. The income tax rates needs to be looked at to address the issue. And of course, economic growth is going to be lower because since the 2008 financial crisis, the main dominant power of economic growth in Malaysia has been domestic demand. So if you levy GST on it, people will have less disposable income, so people will spend less, so that will have the impact on people's spending. But of course, that's one aspect. The ringgit is actually the other aspect because Malaysia is a very export-orientated country. So the flip side of doing a bad job in implementing GST is that people will lose confidence of Malaysia and lose confidence of ringgit. So ringgit will depreciate and our exports will become more competitive, and perhaps that might cause an export-driven recovery. So it is not possible at this stage to say that, okay, ringgit is going to depreciate or appreciate because we do not know how the government is going to implement it, how the financial markets is going to take the implementation. Is it a half-hearted type of reform or is it going full blast? This is something that we do not know at this point. And of course, the issue of welfare cash payments is important because the government has hinted that it's going to do increase the welfare payments. But is that the right way? Is that the only way? How about getting people on the tax system and giving the people tax credit, refundable tax credit, so that people will be more inclined or motivated to register for income tax. The effect on property prices is uncertain. There are two ways of looking at it. If you have GST on building materials is going to increase, construction costs are going to increase, the property prices increases. But of course, the dominant effect is still going to be the supply demand, your sentiment, your interest rate, and that is something that we can only ascertain with a lot more information. And lastly, we believe that the opportunity to reform the fiscal deficit is narrowing. The US government, the US Federal Reserve has put the tapering of the quantitative easing on hold, and with the US government shutdown, the tapering is likely to come much later. So Malaysia is given now a second chance to reform this fiscal deficit problem. But the window is narrowing. One day, the US economy is going to improve, and interest rate is going to go up, and foreign capital will leave our shores. So are we prepared for the day? We have an interactive spreadsheet on our website. This is our link. From there, you can also download our paper. The paper would describe what I've presented to you in more detail to let you know what are the methodologies, what are your assumptions, and the other analysis that we have done. But the interactive spreadsheet, we've done it such that if it's not 7%, if it's 4%, what would be the impact on the household? This is segregated by age, but likewise you can go by occupation, you can go by gender, you can go by ethnic group, etc. So with this, I would like to end my presentation. Thank you for your attention.
Thank you very much, Dr. Lim, for that very comprehensive overview of his paper. For those of you who are interested, his paper is a 51-page document that you can refer to and which you can download from the website. I really like to congratulate Dr. Lim and his team and also Pei Chi for doing this research, because as far as I know, his is the only paper which actually documents out his assumptions, as well as gives you a very detailed methodology on how to calculate the expected or the projected revenues just on households, this is not including businesses, from the GST. There have been different forecasts that the ministry have come up with, but I don't think they actually specify the underlying assumptions. So I really like to congratulate Dr. Lim for making his research very transparent. I think it's also important to just emphasize the fact that the GST will be a regressive tax, and that Dr. Lim has actually proposed alternatives in which we can actually have a multi-tiered system, how we can tax certain goods and services, especially when you go to eat at your favorite hotel like Renaissance and other establishments. Perhaps the GST needs to be higher in order to make the tax, overall tax, less regressive. I'd like to invite now Chi-Chang to come up to again give his response and also share his thoughts on the GST. Chi-Chang.
Well, thank you. Okay, thank you very much. And again, thank you, Dr. Lim, for that very detailed piece on the potential impact of GST on Malaysia. In fact, this is something that we wish that the Finance Ministry would issue to us in more detail, and not something that we have to do independently by somebody like Penang Institute. Having said that, though, I would like to take a step back, and that Dr. Lim did mention, and federal government's position is that GST is necessary to close the fiscal deficit. As you know, Malaysia has been running, or rather the federal government has been running a budget deficit since 1998. So by 2014, by next year, it will be the 17th year that the Malaysian federal government has been spending more than it has been earning. And now the solution to this apparently is that we need GST to raise tax revenues so that we can close the fiscal deficit. Now, the issue here is that in this paper as well, that no mention has been made of the other side of the equation. Bear in mind that the deficit is because we are spending more than we are earning. And if you want to reduce the deficit, you can also reduce spending or raise revenue or measure of both. And what I would say is that, our federal government budget at last count is supposed to be 250 billion ringgit or so for this year. It's likely to increase later when they table a supplementary budget paper later. But also, if you look at the recent Auditor General's report, and the Auditor General's report for many, many years, the last 5, 10, 15 years, it is not hard to imagine that the federal government could actually save some money and still deliver the same amount of services to the people. You cut down on corruption, you cut down on wastage, you cut down on things like that. You can actually still save money and still deliver the same amount of services to the people of Malaysia. And how much can you save? Federal government spending for this year, about 250 billion ringgit. If you can save even 2%, just 2%, not much, 2% is already 5 billion ringgit. That's about close to the level that you could expect to raise from a GST, according to some numbers. So you can cut spending, not so much cut spending, but spend more effectively, cut out corruption, cut out wastage. You save 2% of your expenditure, that's 5 billion ringgit. Now, how else then do you close the fiscal deficit? The other side of the coin, of course, is revenues. And bear in mind, you can actually still raise revenue without imposing GST. First of all, by clamping down on illegal activities. It's actually out there in the open. In fact, say something like cigarettes, illegal cigarettes. About 35% of the cigarettes sold in Malaysia are illegal, meaning that taxes have not been paid on them. So bear in mind, 1 in 3 packs of cigarettes out in Malaysia is an illegal pack. And the estimated loss of revenue to the government there is 2 billion ringgit. Look at alcohol. If you go to some of the shops in Kuala Lumpur, you can see cans of imported beer, San Miguel, 5 ringgit for a 500 milliliter can, complete with the so-called security sticker saying the taxes have been paid. Now you do the maths, and actually the taxes alone are probably more than 5 ringgit, so there's no way that they could sell that beer at 5 ringgit and have paid the full taxes. Now if you clamp down on things like that, illegal cigarettes 2 billion, illegal alcohol maybe another couple of billion, illegal gambling, the illegal 4D market estimated to be the same size as the legal 4D market. Clamp down on that, get back the business, raise even more revenue from there, and then a couple of billion here and there. So you can actually raise revenue through clamping down illegal activities. And the other way that you can raise revenue is by extracting the full value of concessions. When I say concessions, things like APs come to mind, APs to import cars. Right now, the system is that the APs are given to certain companies, and these certain companies, for free pretty much, or rather there's a small amount, I can't remember how much it is. Anyone knows offhand? Anyway, APs are pretty much given out for a small amount, which these companies then on-sell for about 10 to 15,000 ringgit each. If the government actually auctioned up these APs to the end buyers, and get a market price of 10 to 15,000 ringgit each, there's about another 1 to 1.5 billion ringgit that could be raised. So what I would say is that, if you wanted to close the fiscal deficit, there really is no need for GST at this point in time. One, you can cut expenditure, and second, you can raise revenues through clamping down on illegal activities, and secondly, through extracting the full value of government concessions and contracts. The second point I would like to make is in terms of us needing to broaden our tax base. It is true that we are very reliant on oil and gas revenues. It is true that very little of our population pays taxes. In fact, only 1.7 million of Malaysians pay taxes. So our population is 29 million people. Only 1.7 million people pay taxes. Or another way to look at it is that we have about 12 million workers. So less than, of every 6 workers you see, only 1 worker pays taxes. Now, actually, I do believe that more people should pay taxes, because if more people pay taxes, then there will be more outrage when the Auditor General's report is released, because you feel the pinch from your pocket, you have paid the tax. But there's no outrage now, because for every 6 people who are working, only 1 person is actually paying taxes. For the other 5, is, government is wasting money. Okay, it doesn't affect them. So yes, I would certainly agree that more Malaysians should pay taxes, and I would agree that at some point in the future, GST is appropriate for Malaysia. But it is not appropriate at this time, because my point is that at this point in time, Malaysians are too poor for GST. yes, our tax base is low, but just because you want to broaden our tax base, you want to impose a regressive tax on the poor, I think it's a very, very poor public policy. The reason why Malaysians are not paying taxes is true. There are cases of tax evasion, tax avoidance. I think we all go to our regular hawkers. We know some of them are doing very well, and we know pretty much sure that they're not paying their full taxes. But the fact also is that many, many Malaysians live on very, very low household incomes. And this actually is borne out by the federal government itself. If you look at the BRIM payments, for example, BRIM payments are supposed to go only to low-income households, correct? And according to the federal government, BRIM payments have been made to 70% of households in Malaysia. So our federal government itself believes that 70% of households in Malaysia deserve welfare payments at this point in time. 70% of households deserve BRIM payments, which are essentially welfare payments. And yet, while 70% of households are getting welfare payments, because you want to so-called broaden the tax base, you want to impose this regressive GST that's going to burden poor households much more than rich households. So certainly I agree that the tax base must be broadened, but the way to broaden this is not to tax the poor. The way to broaden this is to put in place policies and conditions to raise household income sustainably, to bring household incomes level up, and to also increase enforcement so that more people pay income taxes. And so that more people pay income taxes, and say, of our 12 million workers, instead of only 1.7 million workers paying taxes, maybe 8 to 9 million workers pay taxes. Now, at that point, when the vast majority of your workers are paying taxes, income taxes, then that is a time for you to impose GST instead of income taxes. Because at that point in time, you can impose a much more broader-based consumption tax, and you can also then cut the income tax at the same time, so that, at least for the poorer households, there's more of a net neutral impact, that whatever they don't pay in income taxes, they will fork out in GST. But right now, the income tax mechanism, there's no way to actually offset the pain on the poor, because the poor are not paying taxes at all. So GST certainly is not for Malaysia at the moment, because we are way, way too poor for GST. Most Malaysians are too poor for GST. Now, the third and final point that I have is that GST is actually likely to increase the level of illegal activities. Now, the issue in Malaysia for us has always been compliance is a problem. You look at something as simple as cigarettes. There's a physical product on the streets. But even when there's a physical product, even when there are physical stickers on it, still 1 in 3 packs of cigarettes are illegal. You look at beer, again, physical product sold openly. Even with the sticker on, you do your calculation, the taxes have not been paid, still sold openly. So we certainly have a problem with compliance in Malaysia. And when you talk about GST, so physical products already, like beer, cigarettes, we have difficulty controlling. What more when it comes to implementing GST, which is essentially accounting and paper trail? Our paper trails can be not very well kept. And I think what's going to happen is that as GST is imposed, at least some businesses are going to be tempted to try and circumvent some of this and outright evade some of this in an attempt to reduce their cost of doing business. So unless you have a very strong compliance culture and a very strong enforcement culture, which we don't have at the moment, the side effect of GST really is that I'm pretty sure you're going to see at least a few more businesses decide to cross the line and turn more of their activities into cash-based activities flying under the radar of officially measured income. So those are my 3 points. Firstly is that we do not need GST to close the fiscal deficit because we can spend more effectively and we can raise taxes through other ways. Secondly is that Malaysians are too poor for GST. There's a time for GST. The time for GST is when most Malaysians are paying income taxes, not at this point in time when only 1 out of 6 workers are paying income taxes. And the third is that in the actual implementation process itself, I'll actually be willing to bet that you're going to see an increase in more businesses moving to the cash economy in an attempt to lower their cost of doing business and to circumvent and evade some of these taxes. So that's it from me. Thank you.